In today's video, we are going to be talking about the top 3 stocks to buy right now to make a ton of money. So I hope you guys enjoy it. If you guys get anything in value out of this video, hit that like button, subscribe to the channel. If you have any questions, let me know down in the comments. And if you want to learn more about investing, money management, trading, we do have a course that offers a whole bunch of fantastic videos, quizzes, lectures, and on top of that, you will have access to the chat room, all for less than a cup of coffee. So make sure you guys go ahead and click that link in the description so you guys can sign up. So let's jump into it. These 3 stocks personally carry so much potential. They're companies that you don't have to worry about closing, and the beauty of it is most of them have sold off down to levels that make it an absolute buy. So starting off with stock number 1. Stock number 1 is ticker symbol JPM, also known as JP Morgan Chase. Now, looking at this chart, you'll notice this stock has gone from about $90 all the way up to about $169 before getting some sell-off back down to levels near about $112 to about $125 a share. On top of that, one of the reasons I love JP Morgan Chase is because they have a lot of money. And what I mean by that is they have about $1.1 billion just sitting in cash, which is beautiful. Anytime you have that much money in cash, that's fantastic, because if this company ever goes through a tough time, hardships, they have enough money to continue to invest and build and invest in themselves and grow the business. On top of that, right now, JP Morgan has a profit margin of about 30%, meaning for every $100 they bring in as a company, they profit $30, which is pretty decent. Comparing that to companies like Apple, which is about 20%, which Tesla is rated at about 20% as well. So they're doing very, very well. On top of that, these levels from 160 all the way to 119 for me just represent an absolute no-brainer investment to pick up, this stock that was once $170 that is now $119 a share. On top of that, you do obviously have to look at some stuff, right? Anytime you invest, you need to look at some of the fundamentals and all of that good stuff. Right now, the price to earnings for JP Morgan is a 9.56. And anytime, you invest in a stock, personally, I like to get that thing under 20. And given that this is under 10, this is a no-brainer, absolute buy. You're going to regret buying this. And on top of that, the average analyst price target is about $130. So even if I'm wrong about this thing hitting 170, this thing could easily have a 10% return if the analysts are correct. So let's move on to stock number 2. Stock number 2 is one of my personal favorites. It's Walt Disney, ticker symbol DIS. Looking at this stock, you'll just see kind of a lot of lines, and I understand that. But let's break them down. So it does have some resistance up here at about $200, some support right here at about 168. We had a breakdown of that support, establishing new support at 130, broken down all the way down to about $100. And about $94 is that very, very strong support as of right now. And you'll notice that we've had previous tendencies to get this thing at some buying pressure near and around that $94 mark. So you'll notice we got buying pressure here and here, establishing very, very hard support. So on top of that, one of the reasons I love Disney in general is because they have Disney Plus. And what that means is this is a subscription-based model that Disney has that people will subscribe to, and they put movies on that they already make, and then they sell them in the box office. They put them on Disney Plus, so people continue to buy, and they make a ton of money. They have 152 million subscribers, which brings in Disney a ton of money. Okay. On top of that, they have the parks, they have cruise lines, they have TV shows, they have the Disney Channel. They're a company you don't have to worry about closing, and they are a media powerhouse. And what I mean by media powerhouse is they own Lifetime, they own ESPN, they own National Geographic. And what did I say? Anytime you invest, you want to look at that price to earnings. Price to earnings is very, very important. Disney's is a little high because it's considered more on the growth side. It's rated about a 66, okay? And I get it. A lot of people right now are saying, oh my gosh, why would you invest in Disney with that price to earnings? Okay, What I always say to you guys is when Tesla or Amazon was trading for $600, when Amazon was trading for $600, it had a price to earnings of 3,200. At the time, people were like, "Oh my gosh, why would you buy this stock? It's overvalued." Looking back, you're almost foolish that you didn't buy it. Personally, anytime this stock is under this 117, which is that resistance, right in this zone represents an absolute buy. This for me represents a no-brainer investment of a buy. So if I'm going to try to buy it, I'm going to try to get it from pretty much 115 to about 94. I'll start that dollar cost averaging. On top of that, if you're looking to sell, you always want to sell up at this resistance right here from about 200 to about 165. That's kind of my mindset going into it. And I understand Disney's not going anywhere anytime soon. They beat expectations on their past earnings, bringing in a whopping $21 billion. So I just think that this is a great stock you don't have to worry about. And on top of that, guys, it's just a company that hits home for a lot of people, for a lot of Disney fans. It's a company that you believe in. Okay, so moving on to the last and final stock of the day. It's ticker symbol ADBE, also known as Adobe, another personal favorite of mine. The reason why is because I use their product, I use their software, and I know how easy it is to use. And on top of that, they have a lot of money. They have about $5.2 billion in cash and only about $3 billion in debt. So they have way more cash on hand than long-term debt. On top of that, if we actually go ahead and we look at this revenue here, you'll notice that the increases are very, very nice. An increase in revenue of 14%, of 16%, 22%, 15%, 23%, which is awesome. This company is bringing in a lot of money. It's sold off from about $700 to $400 a share, which is awesome. With a profit margin of about 30%, very, very similar to Chase. This is an absolute no-brainer, investment here. And if we actually go ahead and we look at some of these, price to earnings here, it's not too bad. The PE ratio for Adobe is about 35. Comparing that to a company like Disney, which is 66, this is a no-brainer. I look at these growth stocks, anytime they're under pretty much a 40 or a 50, represent a good opportunity to pick up a couple of shares. On top of that, looking at this RSI, it did hit pretty much below 30, right down in here. For me, this always represents a good opportunity to try to buy some shares under $400. Establishing hard support right here, right? This old resistance acting as support. We established it once, twice. Now it's kind of curling its way back up. For me, this could also look at a good opportunity from a swing trade from, 390 to possibly 450. Just a lot of opportunity with these stocks, guys. So I hope you guys enjoyed it. If you did, hit that like button, subscribe. If you have any questions, let me know down in the comments. And I hope you guys enjoyed it. So we'll see you tomorrow in another video. So remember to stay happy, guys, stay positive, and stay safe. Take care, everyone.